Morning, everybody. Welcome to the Fractal Effects live stream. We are live on Tuesday, Wednesdays, and Thursdays from 10:30 to roughly about 11:30, possibly noon. Please check us out at fractaleffects.com. If you're following along today, please do so in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Please read the disclaimer. Let's jump on to the charts. So we have a lot of news today. Today is also FOMC. I believe it's, check the calendar real quick. We have FOMC statement and FOMC press conference at 11 o'clock and 2 o'clock. 2 o'clock and 2:30. A lot of smaller news drops as well. A couple of red folders. So even though we have NAS on the right, we're going to primarily watch oil. We have US oil here on the left, on the 5-minute. Anytime you have a heavy news day, it's better to just look at an asset that is not as influenced by that news. Possibly a Forex off pair, or again, oil. Right now we have an upside expansion model. This thing's been running all day. We do have a bit of a bearish bias. We've hit some higher time frame PD arrays. Just waiting for confirmation. I believe this thing will most likely, once it clears this, there's a fair value gap right here. So it's either gonna, which it is bouncing off of, but it's also bouncing off the 50. So it's right here within the 20, the 50, and this fair value gap. We want to see it get over this. I believe it's going to take out the highs and then possibly set up to go lower. Remember, every day has a footprint. Either Tuesday or Wednesdays can set the low of the week. Big candle down. NAS looks like it's getting ready for a confirmation long, but again, not an asset we're interested in. Anytime you have FOMC, any kind of FOMC, press conference statement, Powell speaking, you want to wait till that's over and then take a look at this, usually in the afternoon. And sometimes you'll see clean setups, but again, probabilities decrease. Becomes very risky. Right now, oil just almost swept the lows here. Let's see where this closes. We got 1 minute left on this candle. Let's see if it closes above this 50 or if it gives us a confirmation, a bearish confirmation. Still pushing down. Looks like we are getting a bearish confirmation. Let's see if that sticks. We're above the 238, so we are primarily bullish. But at the same time, we've hit some higher time frame PD arrays. We look at the, remember to look at the overall macros. Let's look at the US oil, since we're going to be concentrating that on the daily. See, on the daily, it's pushing down, most likely to take out these lows. This is the only green candle in an otherwise push down. We have an intermediate high that's created here. Usually these are protected. Go back to NAS. There you go, that's a better look. Sorry, this is the day. Daily time frame. We have a fair value gap here. But other than that, we've been pushing down, up, down, and most likely to take that low out in the long run. Let's see if today follows in suit. I think, let's take a look at the 15-minute. So 15-minute also bouncing off of the 20 EMA. Another telltale sign that this thing might want to push up first, take out these highs before coming back down. Bit of a waiting game right now, no confirmation on either side. Bit of a waiting game still. So we do have a fair value gap. Remember, we always want to wait for the opening gap to form in the range. And that's here, right here. It's small, but it's there. Remember, this becomes a pivot point. We saw price hit this, bounce off the 50 EMA. We saw it test it again, bounce off, then it crashed through it. Let's see what happens when it comes back up to it. Or if it comes back up to it. Maybe we can get a confirmation, bearish confirmation, retracement, push down, or maybe I'll push right through it. Like I said, take out these tops, then come down. Slowly getting a push up. And on the 15-minute, we're still getting rejection off that 20 EMA. Is yet to sink deeper than that. Okay, we might be getting a confirmation here. About 2 minutes left for this candle to close. 2 minutes 30 seconds. Let's see if it closes. Body close is what we want to see over the, right here, the gray line, which is the bottom of the range. Remember, we're working with probabilities. When we get these closes and we get these confirmations, our probabilities go up as far as figuring out the bias, the session bias. Got about 37, 36 seconds left in this candle. We want to see a body close over that line to give us a confirmation. Okay, we got a confirmation. Now we're looking for a retracement. We are now sweeping previous lows here. Taken out previous lows. Now let's watch for retracement back into the range or consolidation happening. We want to see if it bounces off any of the EMAs, possibly the New York opening fair value gap, and see if this thing wants to push down. We're hitting the 50 on the 15. This might be a catalyst for our retracement. So this fair value gap formed after the range was formed. The indicator only paints out the ones that are inside the range. Bouncing off the 50. Looks like we're getting that rejection. 10 minutes left in the candle close on the 15. Another 5-minute candle that's about to close. Here we're getting a bit of a rejection there. 6 minutes left for the 15-minute candle to close on the right. We're bouncing off the 50, the fair value gap. We want to see which direction this goes. Looks like we're getting a rejection. Four minutes left for that candle to close. Again, we're bouncing off the 50. It's forming the fair value gap. So in 4 minutes, we want to see if this fair value gap exists, and then the next candle taps into it, possibly hitting the 20, pushing down, or if the next candle just pushes right through it. Getting that retracement. About 3 minutes left on the 15-minute candle. We want to see this candle close. That is a pretty big rejection off the 50. So unless we see a lot of gesticulation happening here and key areas being hit, EMA, consequence encroachment of this fair value gap, then we'll wait for more confluence. Otherwise, this thing could push up higher. We do also have divergence. Excuse me. We have divergence on TDI. As you can see, TDI was going down. The market made one more spike up. Another telltale sign that this thing might want to push down. We're just coming out of overbought. The 50, the stationary 50 is well below us. We're below the liquid 50, which is the yellow line. Okay, so that filled that fair value gap in before this candle even closed. Now we're hitting the 50 on the 5-minute, also the 20. We do have a slow crossover happening. Right in that key zone as well. At the same time, we're bouncing off the 50 and the 15-minute. So this is one of those scenarios where they're trying to create a narrative for both sides to engineer new liquidity, getting buy and sell orders. There are people that are buying here, and there are people that are slowly starting to sell here after looking at some of this confluence. We have a bearish confirmation, even though we have an upside expansion model. But as mentioned before, we are hitting some higher time frame PD arrays. So I want to see more rejection and gesticulation in order to be interested in a short from this location. The market could just push up and then take out these highs and then push back down. So we need a couple more points of confluence. We want to see at least 2 or 3 candles, 3 candles rejecting off of key areas. So we have right now one retracement. This is bouncing off the 20 EMA. Here's the second one around the 61%, bouncing off the 50. So we do have a crossover of the EMAs. On the 5-minute, the price is testing both the liquid 50 and the stationary. So I want to see what happens here. Keep in mind this is oil that we're looking at. Getting a little bit of a rejection. The 61%, 71% area. Off the 50, let's see if this sticks. This could be the rejection. This could be the retracement that we were looking for. But again, it is bouncing off the 50 in an upside expansion model. As mentioned before, our daily bias, however, is bearish. On the 5, we're also now back at that New York fair value gap, that little tiny sliver right there. And we're getting rejection. pushing through. Let's see if we can push through that New York fair value gap. Let's move this over so we can see that better. Again, we're still in the golden zone. Digging deeper into it. Now, if this thing is going to push down, we want to see some telltale signs here. Otherwise, it could go back up, take out the tops, then push. So now it's over the New York fair value gap. So we do have a bearish confirmation. Remember, if this thing breaks the top of the box, then we have a false day. As our strategy is based off of probabilities, once we get a confirmation on either side of that range, there's a 75 to 80% chance that the other side of that range will not be broken. So if we do get a box break to the top side here, then that's a false day. And we would conclude the session. We do not take trades on false days. Now this is a smaller range. There was a lot of consolidation at the beginning of New York Open. But ideally, we want to see some rejection happening and a push down. The second a body, candle body closes over this, we have a false day. And our probabilities decrease, we will most likely conclude the session. Remember, we're probability traders. Anything lower than 70% probability, and you're gambling. Some will say 50-50. No, it has to be 70. Anything under 70, you're gambling. Now again, hopefully you're following along in a demo account. Make sure whichever ticker you are looking at on your chart coincides with the same ticker that your broker is aligned with. We're still above the New York Fair Value Gap, but we're right in that golden zone, 61.79. Getting some rejection. Now again, we're going against the grain as far as what other people would see. They see an upside expansion model. They see this thing's been running up the whole day. But that's the reason that we would be more interested in a short. Getting a rejection there now. Heavy, heavy candle. We want to see it get below the EMAs. It's now once again below New York Fair Value Gap. We got 1 minute 37 seconds left in this candle. Let's see if it closes below. Still just gesticulating there. Back above the New York Fair Value Gap, however. Again, this is why we wait for a confluence. Rejection. We want to see proper rejection. Now we're well above the EMAs. As a matter of fact, it bounced off the EMA, but we're still looking for that short confirmation. Now you can see this red line here, that dotted line, that outlines the last candle of the range. This is another area of interest. We want to see what happens between this area. And the second we get a candle close over this range, we are done for the day. That's a false day. Remember, we are well above that 50 PD array, so we're in sell territory. And we have a bearish confirmation. We want to see rejection and a push. And that's what protects us as well. That's why, again, we work off of probabilities. If we get a bearish confirmation, we have yet to get any rejection here. This is driving pretty hard to the upside. Bounced off that 50. So the second this box is broken and a candle closes, our probabilities decrease. We're not interested. Okay, we're getting rejection. There we go. It does look like a displacement candle. We want to see. Want to see it get below those EMAs. On the 15-minute, we're right at that 20. Let's see if that closes below. We have 1 minute 58 seconds. So we have 1 rejection, 2 rejection. Now let's see if we again get below this, bounce off the EMA. If we get another rejection here, we might be interested. I'm looking for that short. You always want to check if there's even room for your trade. So again, we want to see this candle close. We want to see some kind of one more rejection. And that would most likely be the play. Look how small our stop loss is. So even if this pushes against us, we don't lose that much. We're always going for 1 to 3 risk to reward. 3.18. I'd most likely track it down past this, take partials here, move stop loss to break even, and then wait for it to hit the 238 right there, the orange line. But let's watch this play out and see if it gives us. So on the 15, we closed right near the 20. Okay, we're getting another rejection off the New York fair value gap now. This is most likely the play. Pushing down. Now we want to see some displacement candles. We want to see this thing moving with force. It's been consolidating all morning. Right after New York opened, we consolidated, barely got a fair value gap here. Didn't really give us the smoothest transitions, but I think this might be the move now. Again, even if it goes against the grain, at least we waited for all the telltale signs. Our probabilities were high. We got a bearish confirmation. We got a rejection off the golden area of the fib. Now, as soon as it passes the lows here, if we get it that far, we would move everything. Stop losses to break even, take some partials. Excuse me. Now, since the 238 EMA is a moving average, it will most likely come up and meet us somewhere a little higher, most likely around 76.34. We're now back at the EMAs. 15 is below the 20 on the right-hand side. On the left-hand side, we're right back at that 50. We're below it. And hopefully it just bounces off this. We got 1 minute left in this candle, and then it just starts to push down. Take out these lows and meet the 238 somewhere probably over here. We're getting a bounce. 45 seconds left. Let's see. We want to see this thing now start driving down. Hopefully not slowly. Closing in on 11:30 soon. Got a new candle. Still stuck under that 50. As mentioned before, we are probability traders. Right now the probabilities are high for a short. Whether or not it comes, we were still 70% probability that it could. We're in the Fibonacci golden zone. We got a confirmation short. And even though we have an upside expansion model, the higher time frame bias is still bearish. We're at some key areas. Now, could this sweep one more time before it wants to push down? It could. But we're following all the confluence and hoping that it wants to push down from here. We're still bouncing off around the 50. On the 15, we are above the 20 EMA, rejecting. Coming back into the golden zone. This thing has been consolidating all day. Wasn't the most prettiest. So I might want to take a few more runs if it does want to push down. We're bouncing again off the New York Fair Value Gap right there, the small skinny green line painted out by the indicator. So we went over it, below it, bounced, bounced. The probabilities are still high. Eight minutes to 11:30. Remember, we do have FOMC statement and FOMC press conference around 2 and 2:30, respectively. It's a long wick right there. Hopefully this gives us the push. But as mentioned before, it's been consolidating all morning. This might be a slow push in either direction. But as mentioned before, our bias is bearish. Bearish confirmation, retracement, bounce off the golden zone, off the fair value gap. The target of the 238 partials and break even once we take the lows here. Hopefully you're following along in the demo account. Our goal at Fractal Effects is to help you form a better bias using probabilities and make a better, well-informed decision. Still getting rejection there. Engineering new liquidity. There are people that are long here and people going in short here. Five minutes to 11:30. Remember, our goal is to be in a trade, or at least to see a trade set up within the first hour of after that range is formed. So by 11:30, if you're not seeing a setup, the probabilities are low, you're not in a trade, you just go on with the rest of your day. You don't want to jump into a trade going into the lunch hour. It's just too erratic. The algorithm changes, our probabilities decrease. Market taking one more swipe back up. Let's see if it wants to push past that New York fair value gap or if it just rejects again. We want it to reject, push down. As mentioned before, if there's a candle close above the range, then we have a false day. With this strategy, there's a 75 to 80% chance that once we get confirmation to one side, we will not then break and candle close over the range to the other side. And if it does, and it's part of that 20 to 25% day, then so be it. But we played the probability, we played the odds. That's how you avoid gambling. There's a lot of people jumping in for the long here because we've been bullish all morning, upside expansion. But as I mentioned before, the overall daily bias is bearish. We're just hoping that it doesn't do one more sweep before pushing down. We don't want to see that. We want to see a push down from here. Back at that New York fair value gap, closing in on 11:30. Pushing past that fair value gap. This is why risk management is important. You want to make sure you stay within that 1 to 3 risk to reward ratio. You're risking 1% to make 3%. lot of consolidation all morning. On the TDI, we are below the stationary and the liquid 50. The 15-minute, we are overbought, slowly coming back into the range. Just a lot of consolidation and gesticulation happening right now. We're once again above the New York fair value gap, once again above the EMAs, but still within the range. We don't want to see that range get broken. We don't want to see a candle closing over that range. We're now at 11:30. If we get a box break to the top upside, that is a false day. We will conclude the session. Otherwise, we'd like to see that push down happen in the next, hopefully, 5 to 10 minutes. Okay, top range. Let's see what it wants to do here. Still between the golden zone. Driving up hard right now to the upside. Bouncing off the 88%. Let's see if we're going to get a false day or a push down. Either or, we hope it happens in the next 10 minutes. Top range now. Let's see if we get a candle close. Get a false day. Sometimes you can get a candle wick where it just takes out stop losses and then pushes down. That's why we wait for candle body close to see if this is actually a true false state. We do have push happening to the upside. So that's hit our stop loss. We only set 2 ticks above or below when we enter. I just want to see if this candle closes and we get a false day then today. 4 minutes left in candle close. And you have to be prepared for this. As long as you're doing risk management properly, 1 to 3 risk to reward ratio, then you should not be emotional about it. Three minutes left. Two minutes, 30 seconds left. This candle close on the 5 minute. One minute, 33 seconds left. Again, if we get a candle close, we will be concluding the session. That's officially a false day. Fifty seconds left. Twenty-five seconds left. So we officially have a false state. And again, playing with the probabilities, we will be concluding the session. This was oil in the 5-minute. Most likely they were sweeping the highs here to push back down, but that's why we have rules in place. Never break your rules. Thanks for joining us today. We are live Tuesday, Wednesdays, and Thursday, so we'll be back on tomorrow for 10:30 New York Eastern Time. Please check us out on fractaleffects.com. Please hit the follow button, subscribe, and turn on those notifications so you know when we're live. And have a good rest.